All right, guys, so let's talk about what I think may be the best deal in the stock market right now today. But we all know that doesn't matter nearly as much as what Wall Street thinks. So let's talk about that today. So a lot to get in here in regards to this stock, what Wall Street thinks about it, kind of what I see as kind of the reason why it may be one of the best deals in the stock market going today. So let's talk about all that, but just make sure you like the video if you like getting the truth without the hype, because that's exactly what you're going to get today, guys. Okay, so you guys know I like to get on here. I like to get onto Wall Street, show you exactly the reason why they're doing it, breaking down the goods and the bads, guys, because it's not all bad, right? Even if you're going to lie, a great lie includes some elements of truth in order to make the lie more believable. So, and I'm not saying these people are lying specifically. It's not in regards to this, just in general. That's the reason why a good lie has elements of truth in it. So you got to be able to parse those out, per se. Find the good stuff, find the truth, get rid of the junk, and then you're able to make a much better decision. But let's jump in here and see exactly what Wall Street has to say about this stock.
All right, and last but not least, this is a real tech-themed big three today. Alphabet really got walloped. Still for the week down almost 9% after its quarterly report. A lot of scrutiny on cloud and CapEx spend and all that. Right now, down 2%. Where do you think this could be headed?
Yeah, I don't get it. I loved their earnings. Every important metric was spot on for me. Just a hair smaller, a hair miss on their cloud revenue, which we're going at 30%. Is we really going to be that upset about any misses?
Yep, I'm not going to argue with the guy. He's 100% correct there. I went through the earnings, did not see anything in the earnings that had me concerned, worried, or anything else. This is just typical Wall Street overreactions, underreactions, however you want to phrase it. It doesn't really matter. What happens around earnings is there's all these different, plays per se that they all put on there and all the algorithms and everything else. It's the craziest time in regards to a stock's journey. That's why moves around earnings tend to make no sense because, well, we can't see all the activity that's kind of behind the moves per se. It's not just as clear cut as, hey, we like the earnings, we like this. I understand that's what the talking heads get on there and talk about, and they talk about this and that or whatever the case is. They kind of create their little narratives as they go. We've talked about that before, what those narratives actually mean, what they're actually signaling and things of that nature. Generally speaking, it has a lot less to do with the earnings unless there was a big surprise to the upside, a big surprise to the downside, and much more about how Wall Street positioned around the earnings, how they position themselves around the calls, around the different numbers and what they mean for the different, plays that they have on, all the different option strategies and everything else that's going on there. Much more to do that than what was actually in the earnings. And again, the bottom line is, I don't freaking care what some analyst says who doesn't have my best interest in mind. He has his firm's best interest in mind, and that's exactly what he's doing. And so go back, research that if you don't understand that. But I would agree, I saw absolutely nothing in this earnings. Oh my gosh, we're only getting 30% growth out of a mega cap company. It's just dumb. The narratives you hear are dumb, and that's just part of ignoring that noise. Why I don't listen to them at all, and I just look at the numbers, I look through the earnings, and I make my own decisions. I don't care what the stock price does after hours, or what the CNBC narrative is, or the Schwab Network narrative is, or what this person says, or what that person says, or what Twitter says, or whatever. It just totally ignore all that sort of stuff. Stick to the fundamentals, stick to what the numbers are telling me, more importantly in the guidance, and you'll be just fine. But so far, I got to agree with the guy. He sees it exactly how I saw these earnings.
They're spending the money. The street doesn't like the fact that they're spending the money. I trust Google. By the way, this earnings, they became the most profitable company in the world. They're making more money than Apple right now. So everything is working for Google. People were worried that the search is going to get hit with the AI. I don't see it. I think as long as they keep that brand, in place where you think of searching, you think you're going to Google something, they're going to be fine.
Yeah, the demise of search has been going on now for 3 years, and it hasn't happened. I don't think it's going to happen either, not anytime soon. It was comical 3 years ago when everybody freaked out and pushed Google all the way down to the 80s, if you can believe that, because ChatGPT is going to kill it. Laughable. And I said it back then too. You can go back there and view it. It's just silly at this stage. Anybody who thinks search is going away or any of those other two things, you don't understand how far and away dominant they are in that space. They own the number one search engine, which is Google. Number two is YouTube, if you can believe that. And again, then number three is who knows what, and it's way down here. It doesn't even register on the radar. So, until somebody overtakes YouTube as the number two search engine, then maybe I'll worry about Google's dominance. But right now, it's not even I don't know how else to explain it. It's basically like a professional player versus a little league player right now in regards to search. So just people hanging on to anything they can to beat the stock down for their own purposes. You got to remember that's what they're doing it for. And the AI is going to change this and change that. Well, they're already implementing it in their search. And again, there's just and the lead and the moat and everything else is just so massive on search. It's laughable at this stage to think any of that sort of stuff could happen. Now, decade into the future, 2 decades in the future, who knows? Nobody knows what's going to happen by then. But anytime soon, beating down the stock right now for that reason is just silly. And more importantly, it's opportunity for us.
They're hitting on their AI production. Gemini has been a huge improvement. So I think I'm buying this pullback 100%, adding to my position in Google without a doubt. Their cloud growth is going to be there. And they're spending the money. They're spending it cheaper than some of these other companies because they have their own products to put into these cloud their infrastructure play.
All right, so you're a fan and you think it's even at a better price right now. Rick, your thoughts?
Yeah, it's about a 10% drop or so from those intraday highs that we saw just before earnings. So probably not the most fun move for someone who got in at those highs there. But when we look here, we can see that the volume node in this case.
Yeah, that's where valuation comes into play. You don't get in at those highs. Now, of course, if you're DCAing, that's fine. You'll be fine. But if you were trying to time it or whatever the heck you were doing and you got in at those highs, you're right. It was a little bit overvalued then. Obviously, that was prior to earnings as well, which means, obviously earnings adjust the valuation every single quarter. So, of course, that made the valuation even better, after the move happened, per se, making your buys that you made prior to that at those highs not as bad. But at the time, it was, I won't call it, it wasn't crazy overvalued or anything like that, but it was definitely trading a little bit rich. And that right there is where valuation comes into play. Not this pretty little chart that he has up right there with a bunch of goofy lines on it, a bunch of other things like that. You guys got to understand, if you're going to be a long-term buy and hold investor, that chart right there that they have up means zero, zilch, nada. There's nothing that indicates to me anything, because I've seen it be right just as many times as it's been wrong. Matter of fact, I've probably seen it wrong more often than it is right, and hasn't told me anything in regards to valuation, what the fundamentals are doing, or everything else like that. Now, if you're trading, totally different. Those charts are very valuable. But the moment that they show a guy like that, and he's got 18 different monitors behind himself, and he's got a bunch of screens up and a bunch of charts and graphs like this, he's a pure trader. And from a trading perspective, I just have to trust his opinion because I'm not a trader. I'm not going to sit there and analyze the charts and try to figure out what's what. In regards to it, sure, I know how to do it. It's just not worth my time as a long-term buy and hold investor. So kind of keep those things in mind.
Nearest one to us, rather, was about 190. That matches up roughly with those previous highs that we saw in July. That was the old high there. And then we can also see that we've fallen through some other important areas. We gave up our yellow 21-day exponential moving average, our solid blue line, which is our linear regression line, our line of best fit, and our orange 63-day exponential moving average. So we've fallen through some key points here. Notice as well.
Obviously, it didn't tell me anything in regards to those lines. I don't know. I got my Mega, Gamma, Goopa, Sigma line that I'm going to draw on there. Yeah, there you go. Sigma Rizzler line. That's the one I got drawn on there. That trust me, that's the line you want to make sure you stay above. Otherwise, you make millions of dollars. If you don't, then you're going to lose millions of dollars. Right? I don't know. I'm trying to be a trader here. I'm doing the best I can.
On the RSI, that our green trend line has been broken, and we've broken through that 50 midline as well. So much more of a shift toward the bearish side for this momentum indicator here. If we were to keep moving lower, a couple points of interest, I think. First would be our dashed green line there at 182. That represents a gap that we had back in July, a high point that we had in November, and then another low point after a gap up in December. So it's one of these key price levels where there's a lot of activity, stopping and starting at this level here. So that's one.
So I won't disagree there. It's definitely telling you what the traders are doing, where they're likely to step in, if they're going to step in, and obviously obviously what they're going to do once it breaks or the resistance holds or whatever the case is there. But beyond that, you don't ever know whether or not it's going to bust through, not bust through, whatever the case is. Just so it's not something that I necessarily ever worry about, ever check on. Again, if you're trading, those things matter. If not, buy bomb-based evaluation. If you're DCAing, straight up DCA. If you're not, hey, great. Use your price targets. Stick to your price targets that you put with no emotion, with no looking at charts or anything else of that nature. Maybe you use the charts to help you kind of decipher what that would be. But when the time comes, you got to execute. right? What a lot of folks do is they end up chart watching and end up going, well, if it breaks through, maybe it'll break through so I can get it a little bit cheaper, and then it bounces and goes back up, and then they're all kinds of angry. And I'm like, what were you doing? You're trying to trade, it hit your mark, buy it, move on. That's it. Keep it simple like that. And over the long run, not the short term, hey, great, it went lower than you bought it at. Okay, buy more shares. Buy it on your next DCA at that lower level. That's okay too. Again, it's the long game. It's share count. It's all those other things that we talk about, not magic lines on a chart and a graph and all that other good stuff. Of course, unless you're trading, and then it makes perfect sense. But we're not trading here on this channel. So just to be clear, I'm not knocking traders. Just we're here long-term buy and hold investors. It's not what we do, and it becomes a distraction much more than it is anything else, much less an indicator of anything in regards to valuation and things that matter in regards to the stock.
And also, if we were to break below that blue trend line there, the gap that we formed in December would come in around 176. That also lines up with a sizable volume node. So those are some downside areas to consider. And the upside would be retaking that volume node near 190 and breaking out of that range from 197 to 202, Nicole.
Yeah, understood. Great to see you, Rick Ducat. Thank you for the charts each day here on the Big Three. Joe, today we think about all these Mag 7 names. It's amazing how much Meta has been outpacing. That's up now looking for the 15th day in a row of gains. When you think about the Mag 7, you did mention you like here Google today, Alphabet Google. Any of the others that stand out to you?
Yeah, no, I own. I think I own them all. Some are more expensive than others. Meta is actually, like Google, has a relatively cheaper PE ratio. So another reason to like those two names. I think Google maybe is getting some, a little bit of trade war.
Obviously, as you guys know, I love Meta on this channel too. And I don't understand why Wall Street continues to disrespect that stock. I mean, over the past couple of years, we're not even going to go back and talk about when it was $80. You've had opportunities to buy this stock in the 200s, in the 300s, in the 400s. Just last year, you could get it for a very cheap valuation for whatever reason. I don't know. Wall Street does it. They did it with Google last year too. They actually did it with Amazon last year as well. So it kind of seems like the Mag 7 is kind of going through these different rotations of one runs up, or a few of them run up, get really, really hot. And then other ones of them go down to that undervalued level till you can add. And it's kind of like it's kind of rotating through them right now in regards to when to add and such, which is great. I'm patient. I'm not a trader, so I'm not looking to get out of that one and jump into this one and time all this other. No, none of that garbage right there. Just simply, hey, look, you wanted to give me Meta last year at a great discount and Tesla last year at a great discount. Absolutely. I'm going to be buying those stocks out of the Magnificent Seven whenever you give that to me. Hey, this year you want to give me Amazon and Google and a few others? Hey, awesome. I'm going to buy those too because you've already run up those other names. And in some cases, you've ran them up a whole heck of a lot. So, it's kind of a rinse repeat cycle with Wall Street. If you're patient, you don't buy into the narratives, you don't buy into the hype, you simply do your own analysis, do evaluation, understand what you own, and then execute to your plan. You make a lot of money, even in mega cap stocks. So I love the fact that he's pointing that out here again with Meta because he's right. It is once again cheap based upon valuation after another incredible quarter.
Just getting hit, on the Chinese news, but for me, yes, it does make sense to look at these valuations. It is hard to grow for these really, really big companies when they're at these really, really, really big valuations. You really, just the numbers just keep on getting bigger and they keep on hitting. So that's hard, but it's easier for companies like Meta and Google actually when they're sub 30 at least, sub 25 in both cases to hit these numbers and justify this growth.
All right, so we'll stop the video right there. He is 100% right. These growth rates with these mega cap companies, the ones that are growing right now, there's a couple that are not growing right now. I don't want to get the comment section all kinds of fired up. We're not going to go down that route today, guys. I'm sure I'll put out another video where we can have that flurry of discussion down there in the comments. But you have ones right now that are just executing on an incredible level, continuing incredible growth rates that we're not even getting out of some of the growth companies that we love. You're getting it out of mega cap companies right now. Obviously with Google and Meta, that's exactly what you're getting right now. So this is why, even though I don't like the fact that they make up such a large part of the S&P, there's a lot of other arguments against it and that, we've never seen anything like this where companies are able to consistently spit out incredible profits despite these, crazy, incredible market caps. But yet they're giving you growth numbers to justify those numbers on top of, massive revenue numbers, massive profit numbers like we've never seen before These companies are just like, oh yeah, hey, here, hold my beer. You know, we got more coming this year for you. It's just incredible. And it's why you have to just understand when you have special companies that have incredible moats that just know how to print money. And this is something that wasn't, you know, when you go back, and I always hear the bear arguments are always going back, well, you know, this old company back in, 1990, whatever, was the biggest company in the world. And it's like, yeah, that was true. That was oil. It wasn't tech. They didn't have, look at their margins back then. Look at the margins in big tech now. They're not even in the same ballpark, not even, within the same universe as those. So you're not even comparing apples to apples at that stage. Sure, go back and tell me about, the 1800s, a company back then that couldn't imagine, hitting these numbers that they hit now. That was all the money in the world back then. Now we got companies doing that quarterly. So totally different scenarios. You've got to understand the difference in regards to the number. That was the biggest company in the world back then. Oh, who freaking cares? The margins, the business, everything else is totally different. The TAM is totally different. Everything about it is completely different. And more importantly, growth rates are completely different as well. So you've got to kind of adjust and do all those sorts of things. It's just a special time when you get opportunities to add at great companies at great valuations. You just do it. I heard the same exact argument against Apple, way back 2014. 2016. Like, this is crazy. $500 million. This is nuts for a tech company. It makes no sense. And, here we are, all these tech companies are all approaching 3 billion. Would anybody be surprised to see 5 billion here in a few years? I don't think anybody would be whatsoever. And more importantly, they're giving you bottom line profits. This isn't tech bubble run up type, stuff where, PE ratios are at 500 or 800 or 1,000 or 1,500 or whatever the case is. It's not that. They're giving you these with, valuations and multiples in the low 20s, if you can believe that. Totally different scenario. Everything's totally different. So love it. I would agree that, Google is definitely right now in regards to when I look at the watch list of the stocks I want to buy, definitely one of the cheapest in regards to valuation going right now. So obviously, you guys know, always looking to add great stocks. So I'll obviously be looking to add great stocks as well. And if you want to see those buys in real time, see my complete watch list with price target here. We're almost done with earnings, so I have a fresh one coming out here after we finish up all the earnings. You want to take 5 courses for free, get your free coaching, be a part of the best 6, 7, and 8-figure Discord out there. Well, for those of you guys that stuck around this long, I may have left something special down there in the pinned comment for you. So make sure you check it out, see if a membership's right for you. And click this video here if you want to see exactly what I'm buying in this market. And click here to see my exact plan for this market. So thanks for watching, and we'll see you in the next one.